Hi, Andrew Bell here with you at a really exciting time for our city with the commencement this week of the passenger use of our new light rail. A $1.2 billion infrastructure investment, it will undoubtedly have an enormous effect on so many aspects of the Gold Coast economy and lifestyle. I keep thinking the old saying, build it and they will come. And so from a real estate perspective, the areas on the shoulders of the light rail will ultimately see added value to their real estate holdings. This is another big investment in the Gold Coast, which continues to build a stronger economy. Now back to a closer look at another component of my annual property report, and that is finance commitments. It's a leading indicator of future sales activity in the real estate market. Over the past year, there have been periods where there's been as much as $5 billion extra a month in lending. Now that's significant. We're now tracking with housing finance between $25 and $28 billion a month. Most recent figures were to the end of May, where we saw $27.5 billion in housing finance commitments, which was down just slightly on the all-time peak of $27.76 billion in April. I would expect to see housing finance approvals down in June as a result of the knock-on effect of the federal budget and its impact on consumer confidence. We will see a rebound in figures as confidence rebuilds. Interestingly, over the year to the end of May, we see that owner-occupier finance was up 8.3%. However, the biggie was investment loans, up 23.8%. When we take refinancing out, the end result is that 52.4% of all brand new loans have been to owner-occupiers, and a massive 47.6% were to investors. This borrowing by investors is just below the all-time record of 49%, which is back in October 2003. We see that bank lending has really become competitive once again. And whilst the loan to valuation ratio is now back at very high levels, there is no signs yet of any negative effect on borrowers, with the percentage of those in arrears on mortgage payments are very low, and in fact, falling. The average mortgage across Australia now is around $400,000. Of course, we know that interest rates are at record low levels, with a clear intention of stimulating consumer desire to spend, and in particular in the all-important housing sector. The upswing in borrowing demand occurred early in 2013. Indeed, 2013 saw an increase of 21% according to the RP Data Mortgage Index, and this year has continued much along the same pattern. I will continue with my prediction that interest rates won't rise this year, as the Reserve Bank is still keen to keep us in stimulatory mode. They're more than happy to see us recoup some of the lost real estate values during the global financial crisis. But it is clear that they're not going to allow prices to get out of control. And pleasingly, the only market across Australia that is experiencing boom conditions is Sydney. And therefore I think that there will be no change in rates this year, particularly off the back of consumer confidence being hit post-federal budget. In summary, current lending levels are consistent with good activity in the real estate market. And there is nothing to suggest yet, and I emphasise the word yet, that there is a slowdown, but it'll be interesting to track the next couple of months. I hope wherever you are across the globe that life is good for you. I'm forever feeling blessed to be living here on the Gold Coast when you see some of the events that have been occurring around the globe in recent times. Stay safe and give each of your loved ones an extra little bit of loving. Don't forget, if you're in our region on the 20th of September, we have our annual Ray White Surfers Paradise Muscular Dystrophy Ball, and this year is shaping up to be an absolute bell ringer, excuse the pun. There's only a couple of tables left, and it's only 7 weeks away, so come and have some fun with us. Well, that's it for this fortnight. Wishing you the best of weeks.